Good evening, everybody. Hope everybody's having a nice summer evening. We've had a day of rain here in Pittsburgh. Okay, we're going to try to kind of point out the obvious tonight. And the obvious is easy to see because candlestick signals make it more obvious to see. So as we can see, there was kind of a hammer, not quite a harami in the Dow on Thursday, but notice where it did it, right here on the 50-day moving average, with bullish confirmation the next day, taking us right back up through the T line. Today we did a doji, which isn't unusual after a good, strong move like this. So if that was a little bit questionable, all we have to do is take a look at the NASDAQ. And the NASDAQ pretty well showed us exactly the same thing, but even more so, and that this is a bullish harami hammer type signal with a gap up. Now we're back up above the T line. If we just take a look, this is where, if you just observe the obvious, maybe it's not here so much, probably more over here. But we had an up move, pullback, up move, pullback, up move, pullback, up move, pullback. Now we're heading back up. Which direction is this market heading? If you've just observed the obvious, the 50 seems to be a support. I don't have the 20 on here right now, but I'm pretty sure the 20 was also acting as support. But as very simply stated, if you see a candlestick buy signal on a close above the T line, you're pretty much in an uptrend. And the S&P 500 kind of illustrated that more so. Bounced off the 50, gapped up above the T line, broke out today through this level. So if you just go by the simple rule of thumb that we're in an uptrend as long as we see a candlestick buy signal or close above the T line. So with that, there's a few that are very unexciting, like Maxwell. Maxwell's just stayed above the T line the whole way up. All you have to do is hang on to this. It got a little bit tentative right here. Had this open lower the next day, you would have seen a morning star or an evening star signal right at the 200-day moving average. But as you can see, they couldn't get it back down through the T line. Started right back up again. I've gone in the wrong direction. So anyways, we've still got, now the other one is INFA, IFI, or INFN. J-hook pattern, just kind of a steady eddy. Ever since they broke it up or gapped it out of this resistance level through the 50, you've had a nice 45 degree. All right, I forgot the commodities. Crude oil, relatively flat in the sideways channel. So that's not influencing the market. The interest rates can be influencing the market. This is a pretty steady decline in bond prices, which means we're getting a pretty steady rise in interest rates. Now, interest rates are still extremely low, but you can see where the trend is right now. It is heading up. And gold is still in this kind of bearish trend. If they break this level right here, that's going to take us down another notch. Silver, same scenario. In a downtrend, can't get above the T line. They're still in the process of taking this down. Now, some of the grains, soybeans, just for the first time today, closed below the T line. Now, after hours, it's trading back up to the T line. But this is This is the first break. This is why a series of dojis of indecision, and I tell you which way they're taking it, gives you a pretty good idea which direction that trend's going to be. Still a slow downtrend on wheat and corn. Well, didn't even come close. Corn in this trending channel, which means more than likely they could come back down to the bottom of the trend channel, which is the 50-day moving average. All right, let's see. Oh, I got out of feeder cattle today. It opened higher. I was short. Notice the bearish doji sandwich. Then it closed lower. Let me make this bigger. So we got the doji sandwich. I got out of it up here because it just didn't seem like it was moving until then. This is why you always should wait till the close to see what they're going to do. So I'll be reshorting this if they bring it back down through this level either tonight or in tomorrow's trading, because this is a doji sandwich, and what we know about the results of a doji sandwich is that there's usually follow through after the doji sandwich. And as we can see in the live cattle, this is just resisting at the 50, ready to start heading down. And hogs have been stronger than bears, Brass. Let me get to the right one. Ah, bug. It backed off up here in the oversold area. It hasn't given us a sell signal, but up here right now, if you're ready to short this, start looking for when it comes down and creates a sell signal. After hours, it's trading up a little bit. Now, that's after hours. Usually what happens on the commodities is they close on the open outcry session, I think around 2 o'clock Eastern time, but the electronics continue to trade. So to see where it's actually trading based upon the true chart, you have to go to your 10-minute chart, and the 10-minute chart says we're still kind of right in the same spot. Bring my audio up a little bit. All right. Let me see what we got here. Is that any better? And let me see what I can do over here. Why is this? Volume almost up to the top. Is that any better, Jim? All right. Okay. So you have to use the 10-minute charts because sometimes they will, for example, the close at the open outcry may have been here, but then they were trading it back up after the open outcry, which was going to 4 o'clock. So got to kind of keep an eye on that. And let's see, the dollar still below the T-line, heading down, which means the British pound is still kind of heading up toward the 200-day moving average. The euro still heading up, and the Japanese yen. Japanese yen is not as strong. It's finally broken out through the 50, but notice what it did when it got up there. Kind of did that belt hold, and now let's see. I can't tell if that's not trading after hours. But if they break her back down below the 50, we're still in a downtrend on the Japanese yen. Okay, let's see. KS. This is the pattern that we want to keep an eye out for. Is this slow curve? If you see this slow curve, this is the type of results that you can expect an inordinately high percentage of the time. They make for very good option trades. So if you see something setting up like this, buy some calls. The worst case scenario is it fizzles here and you get back out relatively close to even. That was one of the reasons for recommending BSF BSFT, because it had a slow curve. Then it had a doji, which meant if we were coming out of a slow curve and there was a strong up move, what would happen after our doji? A doji sandwich made this a high probability trade. Same reason we recommended BPRT. Slow curve, did more of a doji type day-to-day, but it's still an indecisive trading day that this one can still be bought on positive trading, because even if it did a doji day-to-day opens positive, that still tells you they're moving it in this J-hook pattern into new territory. We saw that also, the slow curve type setup on ACAD. And when did they break it out of the slow curve? Right here at the kind of a resistance level. You get a good, this is kind of an indecisive buildup, but it's buildup of pressure that usually takes us much higher. How do you determine which strike price to buy? If you look at the, first of all, you want to do your math, and what is this stock trading at? Let's say 15. Let's say you were looking at it right here, and you're right at the 15s. Is it more worthwhile to buy the 15s that might be, let's say I'm going to pick out a figure, at $1.70 versus a 20 that might be at 70 cents? Well, from here, it has to move 5 points just to get to your 20s, obviously. And if this is going to move big, it's going to move big immediately. So I usually pick the least amount of premium built into the option, which in this case, if it was at maybe the 15s were better. Or sometimes it's even better to go down to a 12.5 because there's less premium there. You know the price is going to move fairly big, so I try to stay away from as much premium as possible. Do you not? Yes. So it all depends on what the math works out to be. If they're paying up too much for the 15s, the 12.5s may be better. Now, I don't use delta because delta has absolutely nothing to do with what is going to happen. The delta was based upon what had happened over the last 2 months. Has absolutely nothing to do with what this price is going to do. I'm more interested in where can I make my money based on the chart, not what the delta or any of the previous history of those options were trading. I don't really care. I'm looking for something that's going to break out strong. That was ACAD. So that one with the breakout was fairly nice. Save is another one. There's that slow curve with a doji right at the resistance level. This is where you kind of observe the obvious. If you've got a doji after a strong candle and a pattern, very simple. We know it's going to move in the direction of how they open it. If they open it positive, what's that telling us? It tells us this level is not going to act as resistance, and if it goes higher, we're breaking out. So it makes it a very good visual setup for when to get into some of these trades. ZAG, for example, nice slow curve. This one you could be buying on positive trading because that tells you something's building up after a big indecisive rounding curve. I say rounding curve, but slow curve right here. That tells you new ideas are coming. Yeah, new investor sentiment is coming in. Well, how can you write your own signals and still get them wrong? What did I write here? Huh. All right. Well, that one's gone. All right. The other patterns that become obvious. The J-hook patterns. I mean, here's CESIQ bouncing right off the T line, indecisive trading on the pullback. Now you've got that little kicker type trend kicker. What's a trend kicker tell us? There's more upside. There's a good likelihood that this is going to break out through this level. What becomes our next target? Draw a line up through the tops. That could be your next move to the upside. Yeah, hold on to your individual ones. We'll get to them afterwards. No, I'm buying. I'm trying not to buy too much premium built into the price. I'm trying to buy the ones that make sense. That if you add up the price move and what they might be paying up for an option right now, I don't want the ones where they're already paying up for them or excessively paying up for them. I want something where, let's say, for example, the 10s are trading at. I'll pick out a point. Let's say the 10s are trading at 70 cents. Let's say the 9s are trading at $1.20. Well, that $1.20 means I'm only paying 50 cent. What do they say? A 20-cent premium over where the stock price is right now. Whereas if I paid 70 cents, this stock has to move up 60 cents just to get to the breakout level. Whereas, so I might be making less, getting less leverage, but I'm getting more value for not paying up and having that price have to move that much further to get there. No, I don't want the underlying stock. I just want to buy the option that makes the most economic sense. I can. I haven't talked with Ron in quite a while. If anybody knows how to get a hold of Ron, get me his number. Yeah, we should have Ron come in, and I should have Bill Johnson also come in. He's got different perspectives on option trading. Yeah, even if I'd rather have less leverage, but more value for the option. Just leverage is not always the right. Okay, thank you, Betsy. I'll get a hold of him. Let's see, where was I? All right, let's SUNE. Well, that's not a fine howdy do. What's happening here? We've missed out on some of the information here, which is this J-hook pattern, which puts us right back at this level. This is actually a J-hook pattern, and I don't know why we're missing some information here. But if this breaks out to the positive tomorrow, if this is wave 1, obviously wave 3 will be oops, now I just lost the chat. This is is that exotic materials, okay. Let's see. ESI has worked out very well. Well, things aren't working out very well here. What's happening? S.ESI. Well, for crying out loud, what's happening here? Okay. S.ESI. Huh. All right. Smoke them if you got them. We got a delay here for a little bit. Something's happening to the feed. There we go. All right. Fry pan bottom, J-hook. Price move, J-hook. Notice, if I can make this big enough, notice the type of move we had today. It opened positive at or above yesterday's Friday's open and moved this way. It opened positive and went this way. That's that little trend kicker, which usually implies there's going to be more upside. All right, thank you, Betsy. I will do that. So that J-hook pattern was occurring because of that little kicker, trend kicker. Same scenario here on BKE. This one, I would definitely be buying on positive trading because you can see we're in obviously J-hook pattern, and we had a down day on Friday. It opened higher. I mean, down day in the sense that it traded lower after it opened. Then they gapped it up today above the open of Friday. Now, if they move it positive, we'll basically have a flutter kicker setup, which tells us there's going to be more upside. If we know we have more upside, then we know that this J-hook pattern is going to be working out. Let's see. Dang has worked out very well since it did its J-hook. Would suspect there's still another, maybe one more point left in this one to the upside. So if we can recognize which signals are setting up, or which patterns are setting up, and we can see that the market isn't changing direction, all we have to do is be able to identify in the market that there's no major change of investor sentiment. That means these patterns will be have a lot more opportunity to perform the move they should based on the pattern. So if we have another 2 weeks of slow, steady uptrend, then we've got a good possibility that this J-hook pattern is going to have the same magnitude move as this move going into that move right there. Now, why do we want to know that? It's because all boats rise in a rising market. We're trying to find the boats that are going to rise a heck of a lot faster than the rest of them. Let's see. SY or SSYS. There's that Morningstar signal. There's that kicker, trend kicker type signal coming up through the T line. That tells us there's more upside. If there's more upside and they break this downtrending channel, that tells me we're going to be in another wave like this. So this is all this is putting the pieces all together that help us analyze everything moving in the right direction. Or the more pieces of evidence that we can put that everything's moving in the right direction, the higher the probabilities we're going to be in the correct trade at the correct time. For example, there's that little Morningstar type signal with two stars in there. But notice where they finished trading this today. If this trade's positive and breaks out through this level with this little Morningstar setup, that means we're probably going much higher. And again, I say probably. The probabilities are that we're moving much higher. Facebook. Morningstar signal followed by a gap up, breaking this downtrending channel. I tell you, there's been a drastic change of investor sentiment, and the gap up tells us there's been a drastic change of the previous sentiment. So that probably gives us a good strong move to the upside. And let's see, KNDI. Oh, wanted to show this one because everybody says, well, you had a big gap up. When do you buy? This is why candlesticks give us the visual ability to see when the selling is over. Profit taking. I mean, it went all the way up here that day. Profit taking. Next day opened positive, but there was profit taking. The next day, they told us the profit taking was over. Did a little doji spinning top, which has made it very simple. If it opened positive here, you could be buying. So once this indecisive trading day told us they're going to move it in the direction how they open it, which they did. They're going to move it in the direction how they open it, which they did. Something right here told us there's a lot of force trying to get into this stock. That was the confirmation, or this was the confirmation that after the profit taking was over, there was going to be that force. I say not confirmation. This was the illustration to tell us there's a lot of force. We just want to see when the profit taking's over, when that force can continue. And HTCH, this one I have, should have been under observe the obvious. The obvious is we've got this little rounding bottom. It closed right here at the resistance level. If it opens positive, we're probably in wave 3. Same magnitude as that right there. And RBCN. J-hook pattern doesn't have to pull back. It can be up, sideways. There's still that little hook this way. Notice when it bounced. It's bounced as soon as they got over here to the T-line. That tells us there's still more upside in this one. There's that little rounding bottom, breaks out through this level. I would not be afraid to be buying this one on positive trading tomorrow. Where's the target? Draw a line up through the top, so that means you've got a good strong run yet to get to the top of the trend channel. And JSO, another one of the solars, bullish engulfing signal. This makes a very simple trade. If they open this positive, they're kind of breaking this little downtrending channel. They're confirming the bullish engulfing signal, and they're telling you they're staying up above the T-line. This enthusiasm that had profit taking has the potential of having that enthusiasm come back into the trade again. What conditions will you put to scan these types of stocks, and which software do you use to scan stocks? Manjo. I use a combination of Metastock and TC2000. Both of them work equally well, and that's a whole different. Sometimes the data, you get leaks in the data. We do for the new members. We do sessions on how to set up your scanning using some of the different softwares. Atlas, very simple, or kind of a bullish hammer, Harami, then a gap up. Basically tells us this gap up after indecisive trading tells us a story. They're going to be taking this a lot higher. Yes, we'll do fibs here. I've got the fib charts all set up. BDBD had a good day because it came up from that doji gap up follow through. What did we just look at? Atlas. Doji gap ups. There's going to be follow through on this one. I don't know if anybody. All right, here's where we're going to observe the obvious. The obvious is that the candlestick signals provide us with information immediately. I probably get asked a question probably at least once a week from people in other trading rooms or trading groups. Say, how many days does it take you to confirm a reversal has occurred? And my answer is 0. If we've got an indecisive trading day, stochastic's in the right place, and they open it in the right direction, we know there's a reversal. We can have a pretty good idea. This is where they were ready to buy once it came back and hit the 50. So this is where you kind of observe the obvious. If you see a potential reversal signal forming right on a major support level, and they start going the opposite direction, that tells you exactly what's happening. They're buying as soon as it got back to that support level. Let's see. I've got a bunch of them here. Maybe not a bunch. BCOV. Here's another one where we got to that. This is in the wrong spot. Slow curve. Where's this one obviously going to go to? Probably up here at least to the 200, maybe even further. RDN was a very nice, observe the obvious. Bullish engulfing signal. Let's make this big enough where it looks good. Bullish engulfing signal. Where? Right smack dab on the 50-day moving average. So this isn't a phenomenon. This is human nature. If you're a big institution and you like this stock, and you like it, and you're going to wait for it to pull back, where are you going to wait for it to pull back to? You're going to wait for it to pull back and see if it supports at a support level, which means big money is not buying here. They're not buying here. They're not buying here. They're waiting to see whether it's going to support down here at the 50-day moving average. Once they see it starts supporting there, that's where they want to be buying, because they've got at least the logical explanation to somebody in their company. If somebody's putting on a major position of this stock, I bought at the support level. Had pulled back right to what we thought would be the support level. Let's see. Do I have this in the Doji sandwich area? I will bring this one back up. Notice our Doji sandwich, which we're going to get to here in a minute. ACW. Doji, right at the 50-day moving average, popping up. Where do you think the probabilities are that this is going? This one's going up. Wave 1, wave 2, wave 3, stochastics coming out of the oversold area, starting back up. There are trading methods. I mean, there's a bunch of trading methods that you can implement using candlestick signals. One of them can be if it pulls back to the 50 and you start seeing indecisive trading, and you can see a wave 1, wave 2, wave 3, you can make your money just trading that pattern by itself. Other ones are if you see a doji followed by a gap up, your best friend, you can trade that pattern by itself. So the reason we want to visually recognize which patterns work is because you might not have a pattern like this for a couple weeks where it pulls right back to a support level. So if you want to be effective in the market, instead of just trading whenever your pattern sets up, if you recognize all the patterns, you can be taking advantage of the ones that are working at the time the market has given us those opportunities. Here is MTG. Pulls back. I mean, you can obviously see that they hit smack dab on this moving average. Now they're back up above the T line, kind of a scoop pattern. Where's that telling us? It tells us there's going to be a slingshot effect, I would guess, until it got back up into this range, and then you're back into your 45 degree. Oh, I didn't mean for it to be, let's see, add a study, add the moving average, set up 20. Give it the light gray. Okay. Add. All right, so there's the 20. All right, oops. And let's see, we got SKUL. Got another, observe the obvious. came up through the 50, used the 50, came back, supported right on the 50, came back up, now pulled back. There's your hammer, doji, right at the 50 level, starting to take it back up. That tells me that if this is wave 1, wave 2, we're into wave 3. Volume has dropped. Okay, I'll yell. Mouth a little bit closer to the mic. All right, how is that? Is that any better? Okay. All right. Can you explain how do you determine the waves 1, 2, 3? No, we're not using Elliott wave. We know prices move in waves. I'm not going to own a stock long enough to care about wave 2 or wave 4. If this is wave 1 and I see that it's pulled back, and I see buy signals, I can pretty well tell that this is a wave 1, wave 2, wave 3. Now, when wave 3 gets over with, it starts pulling back, then this now becomes wave 1, wave 2. Now I see if a wave 3 starts up. I don't care about wave 1, 2, 3, 4, 5 with an ABC retracement. Those are the logical moves, and even Elliott himself said that they weren't set in stone, that the waves are very subjective. You could have a wave 1 through 7 or a wave 1 through 9 or 5 pullbacks or a wave 1, 2, 3, 4, 5 in wave 3. So what I've discovered about Elliott wave analysis is that you can put 10 Elliott wave analysts in a room, point to a chart, and ask them what wave they're on, and you're going to get 40 different answers. So I just use a wave count, a wave 1, wave 2. I suspect wave 3 is going to be the same magnitude as wave 1. Once it gets finished, now it's a different chart. I've gone on to something else, unless this then sets up another wave 1, wave 2, wave 3, or a wave 1, wave 2, wave 3 to the downside. Wave 1, right here. Wave 2, visually you can see right here. And then wave 3 should be the same magnitude as wave 1. Well, there's some people that know how to use Elliott wave. When I did consulting for Enron, the person in charge of the unit or the area, the investment decision, so when an equity investing area, had been studying, been using Elliott wave for 14 years. Still trying to get it all figured out. He could use it well, but it still needed to be fine-tuned all the time. So if you can't learn how to use something after 14 days, let alone 14 years, there's something wrong. So here's again, observe the obvious. Up through the 50, inverted hammer right smack dab on the 50, bullish confirmation. We know that the inverted hammer opening positive the next day makes for a very strong buy signal, and if it occurs right on a major support level, that's just that much more evidence that that's where they were starting to buy. Do I use trend lines? I use whatever I can see that everybody else is probably watching. But my first criteria is, what is the signal? So I'm not ready to buy when it gets back to the 50. I'm ready to buy when I see a buy signal. If that buy signal happens to be at the 50 or the 200 or a trend line or something that we can draw, that just adds that much more credibility to why that signal was occurring at that level. So, and that's why we're going to go into a little bit of, oops, this is not the right way to do this. Going into Fibonacci numbers. We don't use Fibonacci numbers to make our decisions of when to buy and sell. We use our Fibonacci number to see why everybody is buying and selling at that particular level and if it confirms. Now here's MCP. pulling right back to the 50. Now you've got a hammer, a doji, a bullish confirmation. What's our next confirmation? If it can close up above the T line, it pretty much tells us they were supporting here at the 50. It's time to be buying again. Concerning the time frames, too late to enter G. All right, let me go. S.GY. Oh, no, I don't think so. First of all, your stochastics aren't near the overbought area. Now, obviously, this was the place to buy right here, or today's positive open was. So the further you move up, the higher the risk you are. But if the higher the risk, if you like it, you buy in, but you just to be a little bit more diligent as to where you set your stops. If it opened positive and started trading up tomorrow, not in the overbought area yet, but I'd probably still use the open as my stop. I wouldn't want to see it come back down through there. Concerning the time frames, do you make your decisions on the daily time frame, or would you use other time frames for any trading decisions? MP, that's up to you. It all depends on what your time frame is that you're trading. I'm a swing trader, so that means most of my trades are lasting 2, 3, 5, 7, 10 trading days, depending on the market. So I'm using the daily charts. Now, if I was trading intraday, or maybe even a faster swing trading where my trades will last only a day or two, I might be using a combination of the 10-minute chart, the 60-minute chart, and the daily chart. If I'm trading the E-minis, I might be trading the 1-minute, 3-minute, 10-minute combination. So it all depends on what your time frame is that you want to be trading off of. Obviously, if you're not sitting at the screen all day long, you don't want to be using a 10-minute time frame. You probably want to be using a daily time frame, making your trades a little bit longer. If the stock comes to a 50-day moving average and there is a bullish engulfing, but the stock is below the 8 EMA T line, you still buy. That all depends on where you are. For example, right here, if this opened positive, yes, I'd be buying, with the idea that if there's this much strength left in the stochastics, and we've just bought, this was the buy signal, and it's still below the T line, I'd be buying on the basis that it's confirming my buy signal. That's my number one criteria. Number two, I'd be watching very diligently to make sure it got through the T line. Now, if it got up here to the T line and kind of fizzled, that would put a little bit more worry. Then I'd have another decision to make, saying it better get up through the T line tomorrow. If it doesn't, that means the T line is still acting as my resistance. So it all depends on where. Yes. Now on this one, if it opened up here, and I could see immediately, let's make this bigger so we can see a little bit better. Let's say it opened here, it wasn't going up through, and it was right here at the T line. I don't have to make a decision because it's already opened right here at the T line. Now I can make a decision that if it comes up through and starts trading above the T line, I can buy it. If it stays down here, I don't have to buy it yet because if it opened here and traded down here, that's not a good sign. That tells me, number one, that they didn't confirm the bullish engulfing signal, and secondly, that they didn't get through the T line. Now, as it finished as a doji right there, I may not have bought, but now I've got a new criteria for my buying. But if they did a doji that closed right at the T line, I know it's going to move in the direction of how they open it. If it opens positive, I know the T line is not acting as resistance, number one, and I know I've got a doji sandwich. So depending on where you are compared to the T line makes it, if you're trading right on the T line and there's a buy signal, then I'd probably wait for it to close up above the T line. If this happened to occur way down here, a very good distance away from the T line, I'd be buying immediately on the next day with the anticipation that they're going to move it back up to the T line as my first resistance, and I'll see what it does at that level. If things look good at the daily chart, will you give any weight to a 1 hour or 1 or 5 or 15-minute chart that is going in the wrong direction, crossing below one of the short period T lines? Yes. if I see a good chart, let me see, let's say, for example, this had moved up and was fading back a little bit. I said, this is a doji sandwich setting up. I should be buying this. But if I look at the 10-minute chart and it looks like it's all, let's say the 10-minute chart started to look like this, I say, well, I don't need to buy right now. I'll wait till the 10-minute chart starts coming back up again, and I'd rather buy knowing that the 10-minute chart is now coming up through the T line. So if I'm ready to buy, but my 10-minute chart is starting to look like this, I'll just say I'll wait to see how far they're going to pull it back on the 10-minute chart and when they bring it back up through the T line. Now, that all depends on how much time I want to spend getting into the trade. If I see this and I see it's moving up, and I know it's doing a doji sandwich, I'll probably just buy it. But if I saw it and it had already been up here and started moving back, now I'll take a look at the 10-minute chart and say, all right, what are they doing with it right now? It looks like it's going to be setting up a doji sandwich, but is this the correct time to be buying? Yes, we did do the indices, but we may come back to them to show some of the Fibonacci stuff. Okay, the doji sandwich. I mean, this is your best trade setup for a high degree of what if the 10-minute chart shows below the T line, but the daily chart is above? Then you just kind of wait until you see when the 10-minute chart comes back up above the T line. That's confirming that the bulls are coming back in. That intraday you're not caught in profit taking while you're trying to buy. And I'll try to figure out. Let me see if we can do that right here. All right. If let's say I saw this stock, late in the day, and it was trading right around in here. It had already been up here. I'm thinking, all right, which way are they taking it? Are they bringing it down, or are they still taking it back up? Well, that's where I can go to my 10-minute chart and say, well, they're taking it down right now, so I don't need to be in any hurry to buy. Or if I looked at the chart and said, oops, they're just now bringing it back up, and it's getting near the end of the day, and they're bringing it higher. If they're bringing it higher, what's that going to do to my daily chart? That's obviously going to say they're bringing it back up toward the top of the trading range, which is exactly what I'd like to see on the daily chart. So if they're near the close and I can see the 10-minute chart is starting to turn positive, that means they're going to be buying into the close, confirming or completing the pattern that I expect. What was I going to be going to? SPWR, was that the one? Oh, so there's that doji sandwich. The doji sandwich is just so easy to apply. But if you see a bullish day in a doji, especially if your stochastics are heading up, and you're right at the T line, you either just crossed it or right near it, and they open up positive the next day, that basically tells you what's going to happen. You're going to have a doji sandwich, which means your other indicators aren't going to act as resistance. They're going to go through. ACRX. No, this was more of a doji on the TCNet or Metastock. If this was a doji, we had a bullish golfing right here on the T line. A doji, if it opened positive, what would that be telling us? That tells us we're still moving up, and we can already see there's a J-hook pattern in progress. But if it opened up after the doji and did a doji sandwich, that tells us we're going up further. Michael, the doji sandwich is pretty new, and so if you just sit here and watch it, you're going to get enough information built in. A doji sandwich is very simple. A bullish day, stochastics heading up, a doji, and we know the simple rule of a doji. it's going to move in the direction of how they open it after a doji. So if you can see there's a pattern setting up, and you can see there's a doji sandwich setting up, but if they open positive, you don't have to be that concerned. You can be buying immediately because they're going to move it in the direction how they open it after a doji, which means they'd be moving up positive. If they're moving up positive, they're completing your pattern. That makes it a very safe trade. I don't know whether we've done specific. In the dynamic doji training CD, you've got the doji sandwich in there. TSRX. There's that doji. Notice where the doji is, right about the resistance level. If it opens positive, what's that tell us? They're going to go positive. And if they go positive, what's that telling us? They're breaking out through this level, coming out of a fry pan bottom. How big can the body be and still be considered a doji? Jay, just want to really just see that it's indecision. That the bulls and the bears aren't telling you anything. It's kind of just a little indecision day. They traded both sides of it. So remember, I usually start off my presentation showing the doji and the spinning top. So all you really want to do is be able to visually see that there was indecision going on that day. Let's see, FDML, FDML. There's that doji right on the T-line after a bullish engulfing signal. What's the trajectory telling us? There's a good possibility of a J-hook type pattern. And a doji tells us very simply, they're going to move it in the direction of how they open it. And if they open it positive, they're usually going to do a doji sandwich, which means this J-hook pattern is that much more more confirmed. Where would you put the stop with a doji sandwich? The tail would have stopped me out. Well, number one, yes. If they open this positive, they shouldn't be going this way at all. They should be going this way. So just use the previous day's low of the doji, that it shouldn't come back down through that level. If the sellers are able to open it and bring it down through the low of the doji of the previous day, that means the bulls aren't there. It's not going in the direction it's supposed to be. Let's see. Zales. Again, a doji right here at the resistance level. Is that a doji? Is that a spinning top? It doesn't really matter. It tells you there's indecision right here, and we have a very simple rule. It's going to move in the direction how they open it the next day. What about gaps? What do you do if you have a previous gap down and you have a positive trade the next day? Is that a gap failure? Oh, Tammy, I know you were trying to ask that same question earlier today. You're going to have to give me a chart to tell me what you're looking at. Tango. Doji, right at the resistance level after a bullish engulfing signals. What would be the prospects? Prospects would be it's going to move in the direction of how they open it. Isn't what a kicker? No, a kicker, you got to remember, is a big candle to the downside, and then they open at or above the previous day's open and go the opposite direction. A doji and a gap up or a positive open, that's not a kicker. That's a doji with a positive open. A kicker has a big body one direction and a big body going the other direction. In CLDX, this has been a nice chart because we've had the fry pan bottom. We had the doji gap up. That broke us out of this level. Now we have another doji, which makes this very simple. If they open this positive, they're going stronger, higher, and then if doing what? A doji sandwich after a breakout. What's a doji sandwich tell us? Tells us there's going to be more upside. And EXAM. Doji at this little resistance level. Doji sandwich, where to take us out into new territory. What's the result of a doji sandwich? Usually more upside. So you're going to come out of this fry pan bottom with a doji sandwich. Tells you there's going to be more upside. If I'm not ignoring questions, let me just get through all these, and I'll come back and try to get to all the questions. Chiquita Brands, doji, bullish confirmation, doji sandwich, breaking out through this level, wave 1, wave 2, going into wave 3. So again, as many things that you can put into your analysis of being in the right direction at the right time, slow curve, breakout, doji, bullish trading, doji sandwich. What do we expect after this? More upside. And MMSI. There's that doji sandwich. Took us right up to the 50. Stochastic still heading up. What do we know as a result of a doji sandwich? There's usually follow through, which means the 50 probably won't act as resistance. Next target is to fill the gap up here, and then see what it does after that. And BJRI. Kind of a doji hammer. Bullish confirmation. Takes you out of this bottoming resistance level. Tells us now we've got at least a doji sandwich with a gap up J-hook pattern. Probably implies there's still more upside. And we did RDN. RDN was very easy to see that it was doing a doji right on the T-line. If it opened positive, the T-line was not acting as resistance anymore. EVC right now is at the top of a fry pan bottom. Stochastic still heading up. A doji makes this very simple. If it opens positive tomorrow, you've got a doji sandwich setup, which means if you went up this magnitude, you're out past this level, you're in wave 3. Heath, anytime you ask a question, it's got to have the stock in front of it because I don't know which one we're referring to. Sohu, the same scenario. Sohu came out of this fry pan bottom. Humbug. Fry pan bottom, big price move. Now a pullback or a consolidation, and the consolidation now has a scoop pattern in it. Morningstar signal, good follow through. Today is a doji. What do we expect coming out of a scoop pattern? A good strong slingshot effect. If it opens positive, what do we expect after a doji, after a big bullish candle? Another big bullish candle. And if that occurs, what's that telling us? That we're coming out of the slingshot effect. If this slingshot effect keeps working, what's that telling us? It tells us we've got a wave 1, wave 2. Now we're breaking out into wave 3. Oh, is there lower hour or lower trading after hours? Right now, MP, the doji sandwich is working extremely well. That means even if you're a day trader, you can buy the options on the open, and there's a good probability by the end of the day it's going to have a good move for you. Now, we did that, or I did that with BSFT. Worked out nicely today. Also did it with VPRT. It didn't do quite as well, but it didn't break the trajectory of this pattern. So now my safety net is if it didn't work and it didn't do something completely failing the pattern, like closing back down below the T-line, that tells me the pattern's still in effect. Maybe it's the next day that it's going to work. All right, let me take a gander here real quick. Is Sohu bah? No, I don't know why it would be trading lower. Is everybody else getting the lower trading on Sohu? Oh, 25 cents on a $74, 70 or $48 stock. That's yeah, that's nothing. That's probably the difference between the bid and ask. So, okay, we were going to take a look at, let's see, no, another one here that you want to take a look at for tomorrow is Angie's List. Notice the pullback. Pullback, very indecisive. When they were selling, they weren't selling with any great force. After a while, that indecisive force dissipates, and the bulls step back in. All right, so somebody was asking, how do you use Fibonacci numbers, or do you use Fibonacci numbers for buying and selling? Not really, but if I see something like this, say, oh, they're pulling this back, where are they going to pull it back to? Maybe here, maybe here. Stochastics are getting to the oversold area. But then I can also put the Fibonacci numbers on by hitting the low and hitting the high. And right now, today, it closed almost smack dab on the 38% retracement level. Where's the next? If it doesn't do a buy signal here, that means the 38% retracement level is not going to work. Where's the next level? Well, the 50% retracement is right smack dab on the 200-day moving average, so maybe that's the target. I hear you talking about waves and fibs, yes. So how much or what parts of Elliott wave and Fibonacci retracements do you need? You don't need to. Probably on all charting services, all you have to know about Fibonacci retracements, let me see if I can take this off, is that all charts right over here, I've got a little button that says Fibonacci. All you have to do is hit it, and Fibonacci has 3 numbers to it. When you see a trend, which is this trend, if there's a retracement, they're either going to pull it back 38.2%, 50%, or 61.8%. Those are the Fibonacci numbers. Those are the natural numbers of nature. That's a redundancy. Those numbers work quite often in a lot of nature numbers. I think a lot of study of leaves are that there's a 38% and a 61% difference in the veins of the leaves. And anyway, there's a bunch of stuff that shows that those numbers occur or reoccur quite often. So we don't use the Fibonacci numbers to say where's the where could be the reversal. We're using them because there's a lot of people that use Fibonacci numbers. So if we see a buy signal right here, we know that the Fibonacci 31 or 38.2 was a place where they started buying, or the 50% or the 64% or 62%. I'm sorry. So we don't use them for making decisions of when to buy and sell. We use them for if we see a buy signal, it will add to the credibility of why that signal occurred right at that level. If we saw a buy signal tomorrow, let's say a bullish Harami, without the Fibonacci numbers, it would look like it's just kind of reversing no man's land. So if I see something reverse just at a particular spot for no reason, then I'll throw the Fibonacci numbers on to see if that's where everybody was starting to buy. We do have a Fibonacci training video somewhere on the site. If you need it, email Abraham. He'll get it to you. Let's see. Well, shows what it says. Get rid of this. S.SB. For some reason, oh, that's the wrong SB. Soybeans. Soybeans. Starting to possibly pull back. Where could it pull back to? Could pull back to the 20. This is if it didn't hold the 50. Could hold, or I'm sorry, the T line. Could pull back to the 20. Could pull back to the 200. It could pull back to the 50. Or I could throw the Fibonacci numbers on here from the bottom to the top, and those become more targets of where you could pull back to. Let's see, remove steady. Let's see. So Fibonacci numbers, and you can use them positive, or when you see a downtrend, they're going to bounce up a certain percentage. And the 31.8 and the 61.2 just seem to be natural, or nature's natural numbers where it bounces to. But that's also what I suspect about the T-line, is the T-line is kind of a natural number for human emotions. And that's why it works so well, because where the 200 and the 50 and the 20 can be targets, that's where everybody's making a decision. Very, very, very few people use the 8 exponential. So when it stays up above that level or stays below that level, that's some sort of natural number. Okay, I guess that's about all. Let me see what were there any questions that I didn't, that I missed as we were zinging by here? What are the results of the 3 EMA? Oh, yeah, Jerry, that's all. I put that on the back burner. And I've got that on my to-do list to get that out and get the results out to everybody. So if you will remind me over the next week or so, I will make sure that project gets at least finished up to the point where what results we did have can get out, and then people can start tweaking it. In order to avoid the free trip rule, do you keep a certain percentage of account in cash at all times, or wait the 3 days before reinvesting proceeds from the sale? If you do neither, you are unable to get out of a new position before the 3 days end, I suppose. I think that's only in your, isn't that only in your retirement account setups? Yeah, my list keeps growing, is right. Yeah, since I'm trading mostly out of my trading accounts, I don't run into that problem. Now, I do have people that have money in retirement accounts, and yes, they do run into that problem, that when we sell something, we have to wait 3 days before we can reuse that money. I didn't come in on CLBJ. Ask that after we do the double line. When you have a gap up following a doji close on the prior day, are you buying at the market or looking for some type of retracement for reentry? If I see a doji in the oversold condition, let's see, which ones were we? If I see a doji in the oversold condition and I see him gap up the next day, I'm just buying at the market. It might retrace, but I don't care. I know the results by the end of the trading day or the end of the trade is that it's going to be much higher. Are you still planning to get your scans up on TradeStation? Yeah, it's not high on my priority list. Oh, no, it is on my priority list. I think Pat has us set up for September to be working with TradeStation. That was the soonest we could schedule with them. Let's see. Could be IRA specific? Yes, IRAs have that 3-day settlement. What broker do you use? IB has a 1-day rule, and others have 3-day rule for settlement. Heath, I use. I've got them at different places, depending on whose accounts are where. I use Toss, Thinkorswim. I've got some trading at Fidelity. R.J. O'Brien is strictly commodity trades that I do over there. And I think we've got at least one account at Schwab someplace. Do you keep a spreadsheet on all your trades? What do you mean by a spreadsheet? Usually, I don't need to keep a spreadsheet because I can usually just look at it electronically right on the screen. Do you do scans for TOS? We were starting on that, Jason. I was working with Tom Saznoff. We were getting everything set up, and then he sold out to Ameritrade. And Ameritrade apparently thought there was already too many subcontracts that he was doing, so it was put on hold, and it's never been taken off hold. So I'll let them come back whenever they're ready. TOS has candlestick scans, but they don't seem to follow a lot of your parameters. That's up to them. I mean, you can put whatever parameters you want to on your scans. That doesn't mean they'll work successfully. And my scans, again, have been kind of cultivated over the last 25, 30 years now. How do you pick a target when a stock is at a new high or above all moving averages lines? Based on what it might have done previously, like a previous wave, or if there is a target somebody can watch, like a 200-day moving average, some sort of target that everybody's going to be looking at. Trying to think of, I know, ACAD. No. I'm trying to think of ones that, a lot of them bounce off the 50 and go right to the 200, so that's your first target. Yeah, right now I would think coming out of the slow curve, that's your first target because that's the target everybody's looking at. So they act as magnets. People aren't going to sell because they anticipate that's for the target and they're going to take their profits there. So that now becomes a resistance level, but the target kind of acts as a magnet because there's not a lot of selling until it gets to that level. Same thing as on a pullback. If it hits a 200-day moving average and they start selling, it's going to pick something as a target before they start buying again. Richard, that's one way to do it. Yeah, Jason, we do have sessions, and we're right now because of the heavy activity here in June. We're a little bit lax. We're going to try to do another option. Somebody wanted just debit spreads. We're going to try to do that on the 25th of June, and then July we'll have some more trainings on option trading. I'll see if I can get Ron Ianieri in here, and I'll see if I can get Bill Johnson in here, both experts in option trading. Their techniques are a little bit different than mine, but I tell people my techniques may not be the same technique you want to use. So if you take a look at 2 or 3, might find something in somebody else's that works better, especially when applying candlesticks, and or a combination of somebody's techniques may be the right combination for you. So, yes, and then we'll do another scanning training probably sometime in July. Yeah, I think Dan was on here before, wasn't he? I'll see if we can get him back here. Greg, yes, you can write your own scans for Thinkorswim or TradeStation. So, all right, with that, Jim, go ahead and do the double line. All right, and I can see we're going to have most of them. So, Jim, do the double line again in about 7 seconds. It looks like we'll have every single signal that everybody wants to look at. All right, Jim, the second double line. There you go. All right, let me scroll back up here. Okay. EW, that's got a nice rounding bottom with a little gap up. So again, where's the target? The first target is going to be right here. If it breaks through here, it means it's breaking through here also. That gives you good running room because it's going to come up here and fill the gap. MetLife. This one is probably now going to flatten out into a 45 degree. Notice and observe the obvious. When it comes down below the T line, comes back up, it gets right back into the same trend. So stay with the trend until you see a dramatic sell signal. Starbucks, bullish Harami gap up. This is going to go back up to this level, and then it will do the 45 degree off of there, the same trajectory as before. So this one you stay long as it stays above the T line. Target. Target, I wouldn't trade this long or short. It's been so flat for so long, and even if it does move, it's not going to give you a percentage move. I'd be trading something else. McDonald's. McDonald's is going to come back up. It's got a nice doji hammer, gap up, doji. Watch when it gets up to the resistance level. But unfortunately, McDonald's also is an institutional trader. You don't have too much more upside. The percentage move is not that big. I think the resistance level would be right there, and then you have to see whether it gets out through that level or not. AMD. This one you can be buying on positive trading because it will be breaking, be above the T line, breaking this little resistance level. Look for it to come up and kind of fill this gap, which means it's also probably going to test the high. HNT. Let's make these a little bit bigger. This one still needs to get above the T line. And even if it does, your magnitude of return isn't all that great. You're going to be moving from 3150 area to possibly the 34 area. And it's going to take a while for it to get there. That's just barely getting a 10% move, and it might take 2 or 3 weeks to get there. I'd rather find something that's a little bit more active, unless you're using some sort of call strategy on it. Let's see, what did I do wrong here? HINX S dot HINX. Not coming up. EMC. This one also just stay long, and as long as it stays above the T line, just be careful that your magnitude of return isn't all that spectacular. EMC is also a institutional type trader. DHI, this one has to get up above the T line. You can obviously see that the 200 is acting as support, but now it's got to get up through the T line to break this downtrending channel before you really want to go after it aggressively. And AMT, same scenario here. It's got to come off this 200. If it starts trading back below this level, now you've got a bearish J hook. You want to be going short on this one. GME, this one has to open positive. If you're long, this one has to open positive. If this opens lower, it may be coming back down to test the 50, but it's below the T line, and it's basically telling you there's not a strong force to the upside, that you're probably going to have a very slow sideways moving. This one needed to get on the same trajectory, so that's why it has to open positive and stay positive to be basically on the same trend channel or trend trajectory that it was in wave one. And Goldman. Goldman did a doji. Notice that you have a hammer, gap up, doji. I would suspect you could have a doji sandwich, which would take you to the top of the trend channel, then probably watch to see if a 45-degree doesn't come off of there. Now, again, this is all based on the assumption that we're not seeing any drastic change of investor sentiment, that we're still in a slow, steady uptrend. Right now, LNG, if you're short, you stay short. You haven't had a buy signal, and you haven't gotten up above the T line. If it closes above the T line, you should close out your short position. If it opens lower and starts trading down, you can be shorting this one. RJET. Well, S.RG, whoops, JET. Okay, things aren't working out well here. What's going on? Huh. Let's try. Well, we've got in some sort of bind here. There we go. All right. Let's RJET, let's make this bigger. I must have hit a button somewhere that it didn't like. Still in this downtrending channel. You just have gotten up above the T line. If you're buying, you got to watch this downtrending channel, and you can't let it close back below the T line. Zales target. Something's happening here that your fry pan bottom, I have no idea what your target would be. In a case like this, all you do is stay long until you see a sell signal. S.ESI. J-hook pattern, if this is wave one, which was from $12 to $27, that was how big a move, $12 to $27, $15. $15 from here takes you up into the $41 range. So that's why knowing what the patterns tell you help you make estimates of which positions you want to be in. You might not want to be in something like McDonald's. Well, for crying out loud. Because your upside potential may not be all that great for running into resistance. Even if it does move big, it may only be a 15% move. Whereas something like this one, if we can estimate that if it's a 15-point move off of here, that's a big, hefty move, and the pattern is telling us that we have the capabilities of getting there based upon the historic price pattern. So I'm looking for things that not only have a good probability of going up, but going up big. Oh, mercy sakes. Well. Let's see if we get something else. No, but we'll definitely get the ones that are already up. That just doesn't make sense. Okay, so while we're here waiting for things to straighten out, was this the right place, or is this a good place for a support? Somebody asked, well, you can use trend lines. Yes, there's kind of a trend line through here. Or if I was going to use a Fibonacci number, say, all right, here's the last move. Didn't really tell us anything spectacular, but it kind of stopped, did a bullish move right here on the 50-day moving average, as well as about the 50% retracement. All right, now let's see if we got Well. But this ain't a fine howdy do. Nothing's coming up. All right, hate to do this, but unfortunately, we're not going to be able to do this. So, there we go. All right, got something going here. Okay. Ford, stay long with Ford as long as it stays above the T line. Google's got to me, you can count the waves here. Wave 1, wave 2, wave 3. Now it's gotten up here. This becomes wave 1, wave 2, wave 3. I'm not concerned with what's happened back here. I'm more concerned with what's going on right here. And if the price pattern tells me that wave 1, wave 2, wave 3 is forming, then I know whether this is worth getting into. If I've got strong buy signals, and I can see this type of move capability, maybe it wouldn't be worthwhile if it's just going to come up and test this level, but it'd be worthwhile if it made this type of move. So if I can anticipate that this type of move could be made over here, now that enters into my decision of which positions I want to be in. Ralph, we will do an option. We're doing some more option sessions, and I'll do an option session here pretty soon on which options do you want to buy based upon the values or the prices they are at particular times of a price move. We did Google. We did for Cabrera's. There's your doji sandwich setup. Your stochastics coming up. Big move, doji. If this opens positive, it's going to give you the same degree of magnitude of a move, number one. And if it does, that means it's coming up here, which means your J-hook pattern is still that much more in progress. Doji sandwich here. If this opens positive and moving this magnitude, what does that tell us? It tells us that this little downtrending channel here is going to be breached. You want to buy this one on positive trading tomorrow. Q-Core, doji sandwich. It had a nice big move here. If it opens positive, you could have another big price move. So this is one that if you're a day trader or day trade options, these would be the type of patterns that I'd be looking for, knowing that this was my potential magnitude on another move here. Why does that happen? Because the force of this move was created by something. The day of indecision was just the day of indecision in this move. The force would be just as strong. The buyers would be just as strong afterwards, coming out of that indecisive stage. DDD is probably in an uptrend, but nothing that would make me rush into it right now, other than the fact that it is above the T line. But there's nothing there that would kind of override that as being a good trade versus some of the other ones. Now, this, to me, I consider as a doji. I mean, it looks like a day of indecision. If this opened positive and did a doji sandwich, where did that put us? Puts us up well above this level, which would tell me we're in a breakout area. WTSL, J-hook pattern, positive open. You want to be buying this one. What's the magnitude of this move? Same magnitude as this move right here. DCXM, this one, this one was bad today. Let's make this big enough where we can see it. We had a uptrend, and then they've opened it down here at the lower or below the previous day's open. Did a little bullish trading day today. This makes it very simple. If they open this lower tomorrow, you close it out the position immediately. You shouldn't be gapping down below the previous day's open. This one needs to open positive and trade positive to stay in it. And BB, well, pshaw, here we go. All right. BB, still coming out of this rounding bottom. You stay with it as long as it stays in this, stays above the T line right now. Seco, bullish engulfing, but it's still in this little pattern. I would rather put a buy stop here at 322, buying it as it breaks out to the upside. Otherwise, it might be another 3, 5, 7, 10 days before it breaks out through there. I'd rather buy it as it's moving instead of trying to pre-guess it. Pandora. This one you can be buying. Doji, you're right here on the 50, close enough to say those 50 is acting as support, close above the T line. This one, if it starts moving positive, you've got kind of a semblance of a scoop pattern setting up. YRCW. Doji sandwich setup. This one you can be buying on positive trading, because positive trading here would kind of break this downtrending channel and keep you up above the T line. RSOL, big bullish after a series of dojis. This one you can buy using the T line as your stop. YGE, bullish engulfing, another one you can buy with it breaking this kind of little downtrending channel, plus being above the T line. And GTLS, Well. Okay, up there we go. All right. Doji, if it opens positive, they take it up through this level, you want to be a buyer. PWE, well, if it opens positive or trades positive, kind of a little hook pattern, probably the 200 be the likely target. In FTK, this one all you can do is stay long as it stays above the T line. And DGI, J-hook type pattern. As you can see, you're now into new territory. This one you stay long as it stays above the T line. POWR, Doji gap up, breaking out, stay long as it doesn't do a sell signal. And CVI, stay short. Where's your likely target? You're getting into the oversold area. Watch to see what it does once it gets to the 50. Now, you're in a downtrend because you had a doji gap down, so you're going to have enough force to keep this one heading down until you see a buy signal and a close back up above the T line. XONE, nothing wildly exciting except you did have that little doji or the kicker, trend kicker, which tells you there's more upside. I'd probably use the first target along the tops right here. So this one, as long as it stays above the T line, you can stay with this one. And Yelp, doji, look for a doji sandwich on a positive open tomorrow. Notice where it's coming off of, a bullish engulfing signal right on the 50-day moving average. Marvell, another one that this one came up off an inverted hammer off the 50, opened lower today, but here's the nice thing about candlestick signals is that most people say, well, this was down today. Yeah, it was down, but the buyers were still there because after it opened, we have a green candle. That tells you they were buying above the level that they opened. That means buyers were there today, just at a lower level. PAG, doji gap up. You continue to hold this until you see a sell signal. MMSI, this one you buy on, there's your doji sandwich. Buy this on a positive open. That means the 50 is not going to be acting as resistance. And what do we know about a doji sandwich? There's usually follow through after the doji sandwich. We did MCP and needs to get up above the T line. Would it help? It would help me if you could fully explain your use of options with some specific examples with explanations sometime. Ralph, we'll do that. Oh no. Maybe this is the one that goofs things up. Not responding. Okay. That's a nice rounding bottom. This one you definitely want to be looking at tomorrow on a positive open. Let's see. The one I'll probably be going after tomorrow is this one. Doji sandwich. Yeah, that one should have some more upside. We did Goldman. LEDS. Nice rounding bottom. This one's breaking out nicely. This one you can buy. Just make sure your volume is good on it. Apple. Apple, to me, is still just so caught sideways, I wouldn't be trading it right now. There are times when you want to trade Apple, Like when you can see the trend start. There's times when you can see there's no trend. You don't want to be long or short. Take your money, go someplace else. Apple will be back in 3 weeks, and you can figure out which way the trend is at that time. MBA, that doesn't look like it has a lot of volume in it. I can't help you with that one. Let's see, did we do Google? Yeah, we did Google. Google is, I wouldn't be afraid to be buying this one going into wave 3. AAV, this one's got a nice little J-hook pattern setting up. I wouldn't be afraid to be buying this one. Just make sure the volume's good on it. And TNP, another doji setup. This one, if it opens positive, you want to be buying with the anticipation that if it breaks out through this level, you've got a scoop pattern, giving you a slingshot effect into the next move. CAG had a good looking chart. This one, right on doji, right on the T line, makes it very simple. If they open up positive, they're going to go positive with it, breaking this downward trend channel. After you've had a hammer doji gap up, then a doji sandwich potential, that tells you there's going to be more upside. And NOR, better give this some NOR. There's nothing there that makes me want to buy this one at all yet. It needs to show some evidence of buyers. What's happening with these darn charts? This one, you don't buy until you see it close above the T line. If you own it, it better get above the T line very quickly. If it fails, you want to be back out of it. Let's see, CLB. You're above the T line, but it needs more strength right now. You've got a good reversal signal, the Morningstar signal, gap up. I would be putting a buy stop just above today's open, which would take you up through the 50. Halliburton, another one that needs a little bit more strength. Now, I say a little bit more strength. Today was just kind of a consolidation day. This one didn't close below the T line. This one needs to open positive and trade positive to stay in it. And RGEN, same scenario. You've got the nice buy signal right off the 50 with an inverted hammer doji or a spinning top type day. Confirmation, and notice what they did. They used the T line today as support. You just don't want to see this one close back below the T line. Intel, just so sluggish. This one's got a cup and handle setup. You just have to be very careful that, even if this moves, it moves so slowly, percentage-wise, it doesn't really do much good to have your money out there. Ford, this one's just a long-term hold. Stay with it as long as it stays above the T line. MNKD, another one. Get ready for the pop. Notice what it does. It moves up, moves toward the T line, pops toward the T line, pops right there at the T line. If this opens positive and breaks this little wedge, they're going to pop it up the next move. Yoku, this one you can be buying on positive trading. Nice little rounding bottom, gap up, bullish confirmation. Camp, slow curve. This one, get ready to buy. You had the slow curve that had a decent move, but now you got your second slow curve. This tells you that there's probably some energy starting to come into this one. FIO just doesn't seem to want to get out of its own way here. I wouldn't be trading FIO one way or the other. It's too flat. You need to see some energy in it, and it's not there yet. MLT, that one's not coming up. AVEO. Oh, boy. Let's see if we can get any. All right, you got a bullish engulfing. This one you can be buying. Just make sure your volume's good on a 250 stock. They could pop it back up to test this level. And Occidental, this one right now, you don't want to be long. It needs a very strong buy signal to want to go long on this one. You've had the evening star signal. You're below the T-line. If you own it, I'd be out of it and trading something else, number one. Number two, even if you are trading this one, the movement is so slow. Again, this is an institutional type hold. ANR, stay short until you see a buy signal. IBKR. S.IBKR. This one you stay with as long as it stays above the T-line, but obviously they've got to move this one back up to kind of a doji or a stick sandwich. HNR closed near the low end of the trading range today. It closed more than halfway down the kicker signal. Not a killer, but kind of running out of steam. This has to open positive and trade positive to stay in it. If it trades lower again tomorrow, you just have to get out of it and wait for the next buy signal, which there will be another buy signal because that kicker signal got somebody stirred up. It'll usually come back again. AMBA. Still in a slow downtrend. You stay short until you see a buy signal and a close above the T-line. That's not the right one, is it? S.AMBA. That's different. All right, this has got the nice little rounding bottom. This one, if it opens positive, is going to be breaking out into new territory. And Goodyear. Goodyear can't get up above the T-line yet. You don't want to get in this one. Notice your stochastics are still heading down, and you can't get above the T-line. There's better places to be trading. We did Intel. Amazon had some nice chart action here, breaking out through this level. Notice how your indecision here, and then doji gap up tells you which way they're going to take it. And Bank of America. Bank of America is kind of going sideways. And right now, long term, you hang on to Bank of America because it's got an upward chart. As a trader, I'd be trading someplace else right now. It's moving sideways until you see a good move, or good, bullish confirmation. MNKD, well, this one you're getting ready for the gap up. Keith, we did these already. Or YRCW, you can buy this one on positive trading after the doji. So MMM was on. Whoops, that's not the MMM we want. Doji gap up. Pulled back a little bit, but didn't change the fact that they gapped this up. Be ready to buy this on positive trading if you like that type of stock. Again, you got to factor in the lack of volatility. Could the Dow be setting up for a possible doji sandwich tomorrow? And it's Tuesday. Yes, the Dow has a nice doji sandwich setup. If this opens positive, what's it telling us? It's basically telling us they're moving further away from the 50, and they're moving away from the T-line. They're getting back up into this area. Where can this rally go to? Back up here until it gets to this trajectory, and then starts back up again. We see quite often that the The pullback has the trajectory come back up above this level and then starts right back up steady again. Visa. Oh, Visa. There we go. Yeah, that's kind of your doji sandwich. Yep, we can be positive on that one. Obviously, the options. WTSL, stay long. This one you can be buying on positive trading. Out of the many instructors I have paid mucho dinero for, may I say that you are the most informative and entertaining. I hope entertaining. So far, yes, and I just started with you. P.S. I have not been solicited for my endorsement. If you could call it so, trade well, stay thirsty, very fast. All right, thank you, Michael. That's, I hope that's my modus operandi, is that hopefully everybody will get more information on here in here than they expect. I figure that's a good way to do business. Okay, thanks, James. Halliburton looks like ready to take the next leg higher out of a fry pan bottom. It could be. I don't know what happened here that's what happened. I made the charts too big. Yeah, Halliburton coming off the 50. Again, wave 1, wave 2, wave 3. Is there a dividing line? Usually I'm buying options in stocks that are trading at probably $40 or greater. Anything between probably 20 and 40, it's a combination of stocks and options. And if it's below 20, I'm usually just buying the stock. Now, I say usually. It depends on which account I'm trading in. If I'm just trading in some of my play accounts, I might be buying a $15 stock with options. But definitely if I was looking at something like IBM or something big price, I'm usually going to trade the options on it. So I'm not tying up a lot of capital. Options have safety factors to it, yes. Yeah, just because again, there are going to be times when a stock price looks great, but you're not going to be able to find an option trade that makes sense. That's because the prices have moved too far out of whack. But that's the advantage we have with our analysis of the charts, is there are tons of charts out there each day that have potential. So with 7,500 charts to look at, and you're even in a down market, you're still going to find 2 or 3 positions that are going to be moving positive on very good charts. Or if the market's trading flat, you're going to find a bunch of good bullish positions as well as bearish positions. There's always going to be more trades than what you're going to be able to handle. Let's see. Dow futures are slightly lower. That really doesn't bother me. Futures don't mean anything until 5 minutes before the market opens. That's where the big money is starting to put their decisions. Your average daily volume, could you consider as too thin? Mike, most of my scans are based on stocks that are trading greater than $5 and trading more than 200,000 shares a day. Now, obviously, if a stock's trading at 70, it doesn't need to be trading 200,000 shares a day, because you're not going to go out and buy 1,000 shares, or I don't quite often. buy 1,000 shares at $70 a share. No, don't worry, Mike. Just like any other cycle, you'll be someday saying, show us more car pictures, the jokes, too many jokes. How's that? I did find the white walls, yes. Bought some white walls in, I think, Hershey, Pennsylvania. They're supposed to be here hopefully by tomorrow. Okay. STO, yes, stay short. Even though you're getting some buy signals, your stochastics aren't confirming. And T-Lab. T-Lab's got a nice little rounding bottom. Just make sure your volume's good. White chocolate, I've got some cars that have big, huge white walls on them, but the ones I needed were only 3/4 of an inch. KP, sometimes you have to tweak them a little bit because the whatever algorithms they have set up and whatever scanning. So just tweak around with them. If you're playing with the stochastics on your charts, it shouldn't take you any more than 10 minutes to finally get the numbers to work out where everything looks the same. Yes, Mike, we did a study, or my buddy did a study on how I can get in and out of the car. You first have to lean in. You put all your weight on the center console, and then you slide your butt in. And then to get out, you lean over on the center of the car and shift your butt back out. So, which is much more elegant than watching me flop out on the ground right there in the car shows. So anyways, all right, we'll call it a night. I hope got some information tonight. We'll see everybody in the chat rooms tomorrow.